Welcome to Rice TVX. On today's Rice Report, I am joined by the Master of Technical Analysis for his 9th appearance. Check out the playlist down below. I am joined by Gareth Soloway from Verified Investing Crypto and In the Money Stocks. Smash that like button, give me a 5x5 so you can hear me, and we're going to get this thing started in just moments. And before we begin, a few quick messages from the sponsors of Rice TVX. You can always find information in every video description for Pre-Search, the decentralized search engine, and Monarch Wallet. Before we get into it, take time to visit my website at ricetvx.com. There you can sign up for my mailing list so you can stay up to date on all things Rice. Once you've signed up for my mailing list, you will find links for my channels and socials towards the top of the website. Make sure you are subscribed to both my YouTube channels, Rice Against the Grain and Rice TVX. If you want to support my work directly, as well as get early access, exclusive content for both channels, plus more, join my Patreon. All right, ladies and gentlemen, without further ado, we're going to go ahead and get today's show started. Mr. Gareth Soloway, welcome back to Rice TVX. How's it going, my friend?
Oh, it's going really well. Thank you for having me back.
Dude, I always look forward to it. I was telling you before we went live, man, I miss you. We were doing this thing so frequently, and I know that you've become such an incredibly busy guy. You're in demand, and you picked up the game at what you guys are doing over there at Verified Investing Crypto and In the Money Stocks. So congratulations, everything that's going on with you. Did you just recently appear on a major news financial show?
I was on Yahoo Finance yesterday. Yeah. So definitely, not CNBC or Fox Business, but right up there for sure. So pretty fun to do it. And like you said, I mean, more than anything, we've been building out our office here in Tampa, just outside of Tampa, Florida. And we have a trading floor. We have a studio to shoot film in. So it's been busy, man. It's exhaustingly busy, but it's good.
And I was telling you, I was there at the end of last month, man, and I'm going to be coming back down to the Tampa area. So I'm definitely going to have to come by and visit the facility, check out what you guys are building over there. And again, man, I'm really excited to see you guys moving on to bigger and better things. And I'm going to have a link for your Twitter account. I'll have a link for your YouTube channel now that you're starting to put out videos on a regular. And also I'll have links for verifiedinvestingcrypto.com as well as inthemoneystocks.com.
Nice. And when you're in town, I'll invite you into our studio here, and then for once I can be your host.
That'd be cool. That'd be cool. So you got an actual production area there?
Yeah, we do. Pretty cool little studio there, and then we have the trading floor here, which is fun to shoot on as well.
Very cool. There was a place in St. Pete's that has that I spoke at that had a production area, like a place where you could podcast, do live events. It was pretty nice. I have to figure out the name of it. It's like Custom Creatives or something, and I'm not sure if that's the correct name. But anyways, man, we've had a lot going on this year. We've had these bank failure issues happening. We've got the Federal Reserve interest rates questions as to what they're going to be doing. Before we get into any charts, man, tomorrow it looks like Jerome Powell is probably going to make an announcement. Not probably, but will be making an announcement tomorrow as far as interest rates, whether they're pausing, whether they're raising the interest rates. A lot of people are thinking 25 basis points and think they're going to be pausing after this. What are your thoughts about the direction the Federal Reserve is going to be taking tomorrow during the FOMC meeting?
Yeah, so at least per the odds, it's a 25 basis point rate hike. So investors should be ready for that. Now, having said that, the market has virtually priced that in. So that's what the market's expecting. The big question tomorrow is going to be, where do they guide? Now, if you look at some of these bank stocks, I mean, we had FRC getting bought out, or essentially being seized, and then their assets were bought out by JP Morgan. A lot of people thought that was the end of it, right? Okay, get that bank. It was already in trouble, out of the way. And then today we come in and we see Pac West dropping 25% again today. The regional banks, like even big regional banks like US Bank, USB is hitting new 52-week lows. So, my big thing here is that Jerome Powell, by hiking rates as aggressively as he did, he basically has caused this breakage in the system, right? In these regional banks. The big banks are having issues too, but they're big enough to withstand it right now. The regionals aren't, and that's why you're seeing these type of dumps. But again, PACW, I mean, that is a nasty decline. At one point today, that was down 40%, looking very similar to what happened to FRC.
Well, let me ask you, man. I mean, you've had a lot of experience in this game. Do you like? To me, this looks like some sort of agenda of a consolidation of the banking system, getting rid of your local, your regional banks, and going to like you're too big to fail. And it's not really too big to fail; it's too big to allow to fail.
Right.
It's kind of, and then real quick, JP Morgan, supposedly no bank is allowed to hold more than 10% of assets of United States citizens. And
Right.
with this purchase, with them having this bank purchase, it apparently puts them over the 10%, which is very, very interesting. And the same thing happened in 2008 with Bear Stearns with JP Morgan.
Yeah. Yeah, and basically they needed a special dispensation to be able to acquire these assets. But the Fed, again, is looking for anyone at this point. There's, there were a few other bidders, but there were not a ton. And I think the Federal Reserve here is trying to kind of calm the fears. And so by having JPM step in, they're hoping that it would calm those situations. Obviously, it's not having that impact at this point. And what I would just like to point out is that the market is like, essentially when you're in the markets and you have these stocks, it's like shark infested waters, right? Is that when you have one of these banks collapse like FRC, the big players, the hedge funds, they sniff out other opportunities. And essentially Pac West is one of those opportunities where they realize now that they can pound these companies down, these stocks down, and ultimately get them to go to eventually zero. And so this is where the blood is in the water, and you have bigger players that are now trying to create more issues in the banking sector to try to make money. And essentially this is just the way the market works. You look at any sector that's gone through hardships, this is again what happens.
You would almost think that it would people would at least have some sort of morals and not try to look at victims with this banking system. I mean, because it's the small and the regional banks, it's not really anything of their own fault that they did to be in this position. A lot of it has to do with the interest rates, purchasing bonds, and what those bonds are worth compared to the short term bonds. That's where it seems like this is an agenda, something on purpose. I've been kind of saying problem, reaction, solution, consolidation.
Yeah, and the weird thing is, and again, I'm not sure if there's a bigger agenda here. I know that kind of thought process has gone out in the markets right now and in the social media sphere as well. It may be, it may not be, but if it is, I think it's a direct correlation to the government and the Fed getting closer to launching the CBDC. In fact, to me, it's if you look at look at what's going on with Ripple, right? I mean, the judge is not contemplating the facts of the case for this long. The judge already knows the decision. He's just not releasing it. He's been told to hold back on it. Look at what Coinbase is doing. Coinbase is suing the Securities Exchange Commission, the SEC, because they're saying, hey guys, we've asked you a million times for the rules. We'll follow the rules. We just need to know the rules. And they're still not getting the rules.
Right.
And so to me, what this is telling me is that the government wants to get the CBDC out there to get a foothold before they give the clarity in the crypto markets, because once they give clarity in the crypto markets, then the big players are going to start getting in and starting establishing the crypto sphere, the Bitcoin as the place to be. And so they need the CBDC to launch first so that they can get a foothold first. And by the way, this is exactly what China did, right? China essentially said, hey, we're going to get rid of or outlaw Bitcoin. And what do? They launched the digital yuan. Now the digital yuan has a foothold in China. It's being used as kind of a reserve currency with other countries. Now they're like, okay, Bitcoin is now okay because we have that foothold with our CBDC essentially.
Interesting. So yeah, we got the Fed now launching in next month, I believe, and that will be the railways. Was what we're thinking for the central bank digital currencies. It's I call it a state sponsor PayPal,
Yeah.
basically.
Okay.
Um, that's pretty much what it is. And so with that being said, something else that I found out recently, there's been mentioning of the Federal Reserve is not allowed to offer direct accounts to citizens, and that's in the law. We could see something potentially change, with some congressional legislation potentially. I saw something about post offices and banking. I don't know if you've heard about this, but the post office actually is a bank.
Oh, interesting. I was not
And
aware of that.
there was something that happened in 2020, and I think there's going to be a big push without trying to alarm the American public with having people have Federal Reserve accounts. It may be something that has to do with our local regional post offices. So something to look at, something to pay attention to.
Yeah, I also heard that the Federal Reserve is launching Fed Now, which is supposed to be a much quicker payment system, and is trying to kind of get in front of the ripples in terms of payment systems and other digital currencies as well. So yeah, I mean, there's a lot. If you think about it, what's going on behind the scenes right now is that all of these Federal Reserve players are trying to figure out how do we still maintain control of the system when you have these other methods that are now being more widely accepted. And then again, there's no doubt that they're in a rush to get this type of stuff out there and maintain control.
Right. 100%, man. 100%. And it's going to be interesting to pay attention to. As far as the charts go, do you mind pulling up the DXY?
Yeah, absolutely.
Because obviously, I think this is kind of setting the direction of a lot of things moving forward. And it's the dollar still seems to have a lot of strength in it.
Mm-hmm. Yeah, I mean, so this is the key, right? Is so there's no doubt we topped out on the dollar last October. If you look at when Bitcoin bottomed, when equity markets bottomed, there's that correlation, right? When the dollar topped out, most risk assets bottomed. That makes sense. Gold bottomed as well. We've seen gold really rip to the upside. What we're seeing now is this breakage of this trend line, this upsloping trend line that goes all the way back to kind of the 2021 period, and we did break below it. And then look at how we broke below it. Then we retested the line, pulled back, and look at today's high again, retesting that line. So you are seeing stabilization in the dollar here. But to me, this is actually a bearish pattern formation. I actually do expect further downside on the dollar. I think it coincides with realization that eventually we are headed into a recession, right? So the markets are ignoring that. I mean, I've gone off on tangents in regard to this, that again, the markets and investors are back to the times of 2021. I mean, look at Pepe, look at Gensler, look at what Nvidia's done recently, Microsoft. I mean, money is flowing freely into the market, but there are, to me, warning signs, including that the Fed said there's going to be a mild recession later this year.
Mild. It's so funny because I think
Yeah.
it's going to be a lot more than mild, and it's
Yeah.
It's creeping. It's like basically depression level. I mean, when we think about this, what happened in the 1929 stock market crash, and considering we're in a lot worse of a position as a nation than we were then, everything that we've been told has obviously been a lie by the officials. It's transitory, all the BS, changing definitions to words, just keep kicking the can down the road. I mean, we're in a recession.
Yeah.
As far as the technicals are concerned, we're in a recession. And that's what's been really interesting as far as watching the markets, man. I really wasn't expecting Bitcoin to perform like it has this year. I think I saw something about you mentioning that you are now a little bit more bearish than you normally have been this year so far during the cycle. What are your thoughts on where Bitcoin's at and where it's headed in the short term?
Yeah, so with the bearish comments, that's more related to the equity markets. I continue to be net bearish on Bitcoin as long as it hasn't gotten through that 30,000 level. But one of the things, and I love showing this chart setup here, I want to show you guys this to see if we can take a look here. So if we look at this chart, this is the monthly chart of the S&P 500, and we see this long bullish move, right? Just continual move up, then this bigger pullback, and then this kind of little bit of upside consolidation. And what I want to do here is I want to bring up a chart with you guys. It's called the psychology of the market chart. And if I bring it up here, and let me try to pop it in here and bring it up. So what we can see is that look at this move up See that move where we hit euphoria, we pull back, which is the pullback from late 2021 through 2022. And then look at what we've done over the last 6-12 months compared to what we've done here in this, or what this chart shows. This is that complacency period. And so what you're talking about is maybe it being a worse recession than the Fed is leading us to believe. That correlates perfectly with this chart. So again, you have the cycle of optimism to belief to thrill to euphoria, then the drop. Then this is where people are starting to believe that the bullishness will come back before the cliff dive to the downside. And again, just going back here real quick, look at how this correlates. Look at the up move, look at the pullback, and look at that sideways chop. So to me, the next move on this chart is going to be the nastiest on the S&P 500. It's probably going to take us down sharply, 3,000 on the S&P, a no-brainer to me, maybe even lower. But again, I would be prepared for the equity markets at least to have a big fall. If we go to Bitcoin, I know you were asking
what was the percentage on that you just had though?
For the drop?
Yeah, from that high point to the low point.
For me, I mean this would be a worst case scenario. This would be like the all out depression retrace. But this is the 2000 high, and this is the 2007 high, right? And one of the things and the reason why I have this trend line in, and I don't want to make people freak out too much because I'm not necessarily calling for this in the near term, but in a worst case scenario, generally when markets break out, and we could see the breakout occurring right here, and it just continues up. Usually when you break out of a level, you retrace to that level before going higher. This never retraced because the Federal Reserve was jacking drugs into the system, i.e. quantitative easing. So it never got the chance to fully retrace. So what this tells me is that if you really get the Fed to be sidelined, you could actually head back to that level, which would be an over 50% decline from current levels. And again, that's the worst case scenario, but I think it is a possibility before all is said and done within the next few years.
I was going to ask, like, as far as like, and I know you can't predict this, but like a time frame, I mean, it's what are the charts telling you of like when we could see kind of reality kind of setting back into the markets?
I would say later this decade, right? So the way I'm thinking about it is that we are seeing inflation come down. It's going to remain elevated above 3% or around 3% for a long period of time, which is going to handcuff the Fed. However, if things get bad enough, even at 3% inflation, the Fed will absolutely come to the rescue. They'll lower rates. They'll start printing money again. I mean, just imagine if we had 20% unemployment. You can't tell me at 3% inflation, they're not stimulating to get us out of 20% unemployment. So there will be a ticking point. The problem is going to be is that if you stimulate when we're at 3 or 3.5% inflation, where's the next high? 12, 15, 20% inflation. Essentially, this is the beginning of the blow up of the system. Right. So there's only so much that they can do without sending inflation to crazy levels. And eventually later this decade, you do get that depression-ish type situation, that flush out.
So you think several years out, though, nothing like in the near term, even midterm? Yeah. Okay.
No, I do think, and mainly it's a little bit further out. So we're still going to see a recession later this year, but my guess is it'll start out to be mild. It'll get a little worse. It'll get to a point where the Fed actually starts to cut rates, and that hopium from investors will get money in. It'll prop up the markets a little bit. It'll help. It'll make money cheaper to borrow. Banks will be willing to lend. So it's going there's stimulative measures that can be taken to just push off that ultimate kind of collapse for a few more years. But again, probably within that 100-year cycle of 1929. So again, later this decade, within a couple of years of that, that's what I would say to watch for.
Okay, that makes sense. Okay, now as far as crypto is concerned, Bitcoin, like what are you thinking about Bitcoin as far as the just the next few months? I'm just really at a very confused state when it comes to the markets. It just again, I thought that this jump that we had seemed I wasn't expecting us to go up 50% from the beginning of the year.
Yes, I agree.
Considering everything else that was going on, and it feels kind of artificial. It doesn't feel like it's completely natural. So I feel like there needs to be a correction. I know we've had a little bit of corrections, but they've been minor corrections. Do you see us heading down? Do the charts tell you that 15.5 is the bottom that we're going to see in the Bitcoin price market?
So as of now, so the big level I've been watching is this 30,500 level. And this level goes all the way back. I'm going to get rid of this level here. So if you go back to the beginning of that mega run up in early 2021, then we had that collapse where we hammered on this level here. We then went up, and then we actually bear flagged before breaking down. So the 30,500 level to me is that line in the sand. The market on Bitcoin tried to get over it. It couldn't. It stalled out. We fell. We now bounced. Now we're kind of falling again. So for me, that was a line where I would say if we got above and stayed above, the low of 15.7 is probably the low. We haven't done that yet. So I'm not convinced that Bitcoin has bottomed. And in fact, even though there's so much bullishness out there on crypto, I would just remind people that if you go back to 2018, 2019, there were bounces that were bigger than this bounce in Bitcoin, right? I mean, we had a $3,500 low on Bitcoin. We then went near 10,000 before retracing to 3,500. That's almost a 3x, right?
Mm-hmm.
So yes, it's a great bounce, but it's not abnormal for a bear market bounce cycle.
Thank you. Well, you said something I was going to ask you, which is, are we still in a technical bear market?
Yes, absolutely.
And you can always see upward action. You can see mini bulls. You can see several month bull runs. You can see 50%, 40% candles up and down, like within a short period of time during these times.
Yes, absolutely you can. And again, just looking back at past cycles in Bitcoin, this isn't super unusual. One of the things that is unusual, and I'll say this, is that the bullishness, and like again, when you're seeing Pepe and some of these other meme coins that are just appearing out of thin air and running so massively, that's not the sign of a healthy market. It's not the sign of a bottom. It's usually the sign of a top. Think back to what we saw with SHIB and Dogecoin in the heights of 2021. That was towards the highs, not the lows, right? And so investors need to just be aware that it's not showing you that we've really bottomed out and we've flushed out. It's showing you that there's still too much hopium in the system, and we probably still have another leg lower to go.
Which makes a lot of sense. It does. As far as cryptos, I'd like to look, if you don't mind, I'd like to look at Ethereum and XRP.
Yeah.
While you're doing that, Pepe is like, I'm sure you looked at the charts. You can't look at the chart and figure out anything from Pepe.
No, there's not enough data on it at all. There's just,
it's been out for like 17 days.
Yeah, it's crazy. And again, this, by the way, this shows the power of social media, right? I mean, so many people on social media talking about something and then people just chase it. A lot of people will get hurt eventually, but right now it's been making people money, and it's encouraging people to kind of take risk. But in terms of charting this, I can't do anything with it. It's a vertical move. There's no, for charting, you really need history. And history gives you the ability to draw trend lines and look at past levels of resistance and support. And this just doesn't have it.
But now, if you were looking at this chart and you were trying to make a financial decision on your own, you wouldn't take this as an entry point.
No, certainly not. In fact, there's something in the technicals that I use. It's called a time count, which is when you get 7 candles in the same direction. So in this case, green, it's usually the signal of a top. So we have 1, 2, 3, 4, 5, 6. So I would say if again, and I'll never short this, obviously, it's just for me, there's not enough reward for the risk that I'm taking in case it does go higher. But if I had to bet, I would say that tomorrow or today is the top, and you'll get a pullback starting as early as Wednesday afternoon or Thursday.
Okay, cool. I appreciate you sharing that. I mean, I didn't really think that there was going to be like anything coming from it, but I really wanted to let people know that they need to be smart. And when you're hearing about things, at the hype. That's when you're providing exit liquidity for people, and you just need to make sure you're studying charts, figuring out a good strategy, a good entry and exit point, and stick to it. Stick to the plan and don't use any emotion.
And that's the truth of it too. And I always say to my traders is that when you're investing shouldn't be gambling. If it's gambling, I always say, you know what, go to the casino, you get free drinks, you hang out with your buddies, you have a great time. When you're investing, you're usually doing it by yourself behind your computer, and it's not meant to be a gamble. The odds should be in your favor. And so for me, I have to be able to say, okay, I have X, Y, and Z that show me historically the probabilities of my successful trade here versus just, hey, I saw it on Twitter, so let me buy it. So it's just, it's a difference between gambling versus investing.
Smart. No, I mean, that's why I like talking with you, because you have so much experience with this, and I appreciate you taking the time to share with everybody and the education that you offer to people, which we'll talk about before we wrap things up. So what are you thinking about with Ethereum?
Yeah, so Ethereum. So the first thing that pops out to me when I look at Ethereum's chart is the difference between it and Bitcoin, right? So we've seen in Bitcoin where it made this 30,000, the 30,000 high was the high here in Ethereum. It was about 2,150. We then had a pullback and then we kind of retested 30,000. Ethereum never did that. And so the first thing that tells me on Bitcoin versus Ethereum is that Bitcoin is seeing a little bit of extra money flow from the banking crisis, while Ethereum's really not seeing much of that. So that's the first thing. The second thing is you have a very clear bear flag here. We started to break lower. You still have support here at 1,800. But if this 1,800 gives way, you're going right to 1,700 and then eventually to 1,500. So for me, looking at this is much more of a bearish chart to me. Bitcoin to me also has downside, but it's not as bearish as the Ethereum chart.
Okay, that makes sense. It does make sense. Okay, so what are you thinking about with XRP? I mean, I thought it was interesting how you were saying that you feel that the judgment basically is in. There's not really allowing for that information to go public. Because for one, I think it would obviously call for some upward action in the cryptocurrency market. Obviously, XRP I think would take off, but I think it would pick up the market. I think it would kind of like be when Bitcoin goes up initially, it pulls the market up with it. I think XRP in this sense would actually pull the market up with it.
I agree because again, the judge's ruling could set a precedent for other coins out there. And so in general, a positive ruling would absolutely ripple through the rest of the cryptocurrency industry. Now, just looking at the chart, it's a tricky chart right now. I mean, you had this beautiful breakout. We can see this is what we refer to as a bullish pattern. It's sideways consolidation to slightly lower, and you can see the channel. It's a beautiful channel. When that broke, that kick-started the bigger move up. We then look at where we went to, though, right to this high here, going back to September of 2022. That's where it stalled out, pulled back, tried to retest, then rolled over, kind of came back to this high here and is just kind of hovering above it. So to be honest, when I look at this chart, I don't see a lot of signals in it. It's kind of like a mixed bag. It's not really bearish. It's not really bullish. It's more just a neutral chart that is not giving us an inkling of positive or negative.
That's interesting.
Yeah.
I think that's the first time you've ever told me something like that. Like, hey, I'm looking at the chart, but it's not really telling me anything.
Yeah, there's not a whole lot here based on the chart, right? I mean, you're hovering above this area, but even if we broke, we have this area down here, and then you're hovering below this high. So you're kind of in between support and resistance levels, which again, almost weirdly makes sense because everyone's just waiting for this either positive or negative decision. So it makes sense that it's kind of like in between. There's no signals being given yet. And essentially what's amazing is the judge's ruling hasn't slipped out, because again, I'm pretty confident that decision has been made. There's just a gag order there. And again, just from the simple aspect of how long does it really take for someone to make a decision if you're a judge and you've had now 8 months, 10 months, a year, 2 years, whatever it's been a little ridiculous. So they're just holding this back until they get more clarity with the CBDC and then obviously with the regulation as a whole for the space before it's released, I bet.
What is the price that you have for the resistance and the price that you have for the support?
Yeah, so the big level
is it like 55 cents for resistance?
Yep, right there, 55 cents exactly.
That's and like right around 40 cents for
43 is a little bit of support because it already hit. This becomes minor. So again, once you hit a support level, and if you come down, let's say tomorrow, this would only be minor, and the likelihood is you'll break. So then your big support would then take us back down to 36 cents. So minor support at 43 cents, major support at 36 cents.
Awesome, man. Was there any other cryptocurrencies that you wanted to chart? Obviously, I love my precious metals, so I want to get your take on gold and silver. And
I'll just share with you here a little chart on Cardano here. So there's a little bit of a cross section right here on a trend line, right? So if Cardano pulled into 34.5 cents, that would be a dual technical support level there. And then resistance remains at this high. And then we could always just look at Matic. Matic's been remarkably weak. So, when we've seen Bitcoin hitting highs, when we've seen a lot of these other coins popping up, Matic was struggling. And you can see even here, it was hovering on support and is now broken. So to me, I would get interested on Matic at around 76 cents. But I think it could go down there. And that's a decent drop, from some 96 cents to 76 cents. But that would be where I would start stepping in as a swing trader to buy Matic.
And if you did leverage trading, it may be a good opportunity for you to short the market, potentially not financial advice. But, when you're looking at charts like this, these are the kind of setups that you would be looking for if you wanted to do something like that.
That's right. That's right. Absolutely.
Interesting. Polygon it's had a lot of growth,
Hmm.
especially over the past few years. So a little real cooling off really wouldn't be a bad thing. It would be a good thing, in my opinion.
Yeah, no, I agree with you on that. And it's just the chart itself is just speaking to how weak it is. When you look at, when did it hit its highs? It hit it back in February. And then if you compare that to Bitcoin just made new highs in April, but we didn't even, you barely saw a bounce on Polygon during that period. And so I watch for these disparities where if a coin is not reacting to the general crypto market moving up or Bitcoin, to me, that tells me it's relatively weak. It's a relative weak signal. And that's just a warning sign to be careful.
And it's funny because you had people just like a couple weeks ago calling for alt season.
I know.
It's like, really?
This was one of my biggest points that I was making when that was happening. I kept on saying to people is that everyone is calling for alt season, which means everyone has already positioned themselves for the move. And then, so the question then is, if everyone's already in, who's left to buy to cause the run up? And there's no one left to buy. So it was a no brainer to me, at least, that we likely wouldn't see an alt season.
Yeah, no, it's just, people are just so confused as to the state of the market.
Right.
Which is understandable because but it still does seem to be following a traditional 4-year cycle, the way Bitcoin has performed so far since its existence.
You're right. And I will say this is with Bitcoin, it was looking real weak over here in March. And then we got the banking crisis, and that really gave new life to Bitcoin. Right. And again, you're seeing today some issues with the banks. Bitcoin's bouncing a little. It's not getting much of a bounce. But the one positive, and again, even though I'm overall negative over the next few months on it, the positive is the banking crisis just lends more credence to why you need Bitcoin, why you need cryptocurrencies to be able to get away from these banks and what they're doing and the risky bets they're taking and have your money secure in something like a Bitcoin. So I think longer term, at least, it's a very positive thing for Bitcoin.
No, I agree. Long term, I'm beyond bullish when it comes to Bitcoin.
Yeah.
Especially just looking at the state of the world and what's happening.
Yeah, for real.
So with gold and silver, do you mind taking a look at that?
Yeah, let's take a look.
Those, because a lot of people, gold has really been doing well, but a lot of people have been talking and speculating that gold's going to get hit and probably see some downward action, and obviously that would affect silver, but silver hasn't done anything compared to like what gold has done.
Yeah. So the gold chart, you did see a short-term breakout above this trend line right here. So that was a positive. We still haven't retraced to the all-time high, which would be a triple top since we hit it back in 2020 as well. So pivot top to pivot top. But to be honest, the way gold is acting, this is going to go a lot higher. And so again, a lot of people calling for gold to pull back. I think maybe a minor pullback, maybe down to this area, 1900, 1920. But honestly, I think this is going a lot higher. One of the things I say is that gold is kind of the pure play for almost any situation. Like if inflation stays high, even if the Fed has to keep rates high because of that, then okay, gold, inflation's high, gold's the place to be. If inflation comes down because there's a recession and maybe we look for deflation, well, if there's a recession and fear and panic, people buy gold for safety, right? We're seeing that with the bank crisis and so forth. So almost any scenario you play out, it's a positive benefit for gold. And I think again, you're looking at probably year-end 2,300 target, and then next year easily 3,000 on gold.
Oh wow! So you think 2,300 by the end of 2023?
I do.
And you're looking at 3,000 during 2024?
Yeah, and it's possible even 5,000 within a couple more years after that. I do think that, again, one of the things I love to show too is if we go to our weekly chart on this and we go back to the 1970s when gold had that last meteoric run, the chart is so similar, right? So you're looking at a move here from 73 to 75 was up just like 2018 to 2020. And then you had this consolidation from 2020 to 2023 here, where, again, same thing in the 70s. We went from 75 to basically 77, sideways to down. And then you had this mega sized run. And I think that's what we're starting to see now. We're just in the early stages of that for gold. And you can see what gold did. Gold went from essentially $100 to $900 an ounce in that run. Now, again, with Bitcoin in existence, it probably doesn't get that magnitude, that 9x, but I think like a 2x, 3x is very possible from here on gold over the next few years.
Yeah, I mean, considering looking what's going on, I mean, I look at gold as kind of being a very parallel and very complementary to Bitcoin.
Yeah.
And I think that they work in the same kind of tag team. Like if they were a wrestling, like tag team wrestlers, it would be the champions, the tag team champions of the world.
Yeah, I agree. Absolutely agree on that. So again, it's a situation where I think, again, if we are headed towards that scenario you talked about, where it's going to be a really bad recession, maybe depression over the next 5-7 years, well, that works perfectly with why people would be interested in owning gold, owning silver, owning metals in general. You could even look at metal like copper. Copper could be a really good performer as well.
I've actually been talking about copper recently, just in case you need to have like some smaller denominations of because if shit really hit the fan and let's say we lost internet, we have a situation with our banking system. I mean, we can be utilizing fractional silver ounces, various different forms of copper, because copper is like and so it kind of gives you like a lot of options to be able to buy with having like kind of change in precious metals.
Right. And that's the key is, I mean, if copper right now is $3 and change, and, let's say with inflation, it's $5 or $10, I mean, that's a perfect denomination for a 1 ounce piece of copper versus if gold's 5,000 an ounce, what are you going to do? You're going to go to the store and say, hey, I need change for this,
Right. So how is copper looking compared?
Yeah, let's take a look at copper here. I want to go to the.
I thought you had it pulled up. I'm sorry.
Yeah, I think no, that's fine. It was the ETF. I wanted to actually look at the one here. So, excuse me. So copper to me is actually flagging in a little bit of a short-term bearish pattern on the daily. Actually, that's the weekly chart. So I could see copper dipping down maybe back to like 325 before getting some traction and starting to move up. So you might say, well, how come gold is so bullish, but then copper is more bearish? And the answer to that is copper is such an industrial metal, right? I mean, like whether the copper wiring, whether copper for connecting electric currents, that's what comes in. So if we do have a recession, the early part of the recession, you'll probably have a reduction in the price of copper versus the later portion where inflation continues to be an issue where it would go up.
Okay. Silver. How are you feeling about silver?
Yeah, let's take a look at silver here.
I mean, obviously, knowing David Brumbelow, one of my viewers and private members, was talking about silver being needed in tech devices and being a major demand. And we've been hearing this, and obviously silver has been highly, highly manipulated.
Yep. Yeah, so the silver chart looks great to me. Like it really does look solid. You had the breakout of this larger wedge pattern right here, and now you're consolidating above. So that consolidation is basically digesting the up move we've seen, which means it's giving energy or preparing for that next move up. So I believe that silver will see an up move. I think this year we test this $30 level. The $30 level will be major resistance, but ultimately I think it breaks through maybe next year. But right now, yeah, I mean, this is, as charts go, this is exactly what you want to see in terms of bullish consolidation on the chart of silver.
Okay, so with gold, you were talking about possibly 2,300 by the end of 2023 and looking at potentially 3,000 in 2024. What, just based off that, do you see silver hitting all-time highs anytime in the next few years?
Yeah, so I think basically, well, all-time highs could be a little bit on the excessive side, right?
We're talking like that's about $50 roundabout, right?
Yeah. So I don't think this year for sure. I think my target this year is $30, a retest of that resistance. Then if we get through that, then I think in 2024 you could retest that high, but I think it would probably be out towards 2025 or 2026 before we take out that $50 level. And again, part of that too is keep in mind silver is an industrial metal, so if we do see that recession, that will be problematic for the price of silver, even if it is a store of safety.
Yeah, that would make sense because the demand would go down because there wouldn't be as many goods produced that would be utilizing them. Yes, makes sense.
Absolutely.
So as far as charts, I mean, I'm going to be respectful with your time. Was there anything else chart-wise that you wanted to cover that you wanted to bring to anybody's attention?
I mean, I would just, again, going back to that chart with the psychology of the markets, be very aware of that. And I also think, we have Apple earnings on Thursday after the bell. to me, the chart of Apple is very, very extended. Just be very, very careful. I think upside, even if it goes up on earnings, it's probably minimized by how extended the chart is. And I look at Apple and I say to myself, hey, listen, you have a $1,300 iPhone. How, if we do enter a recession, which I do think we do, will people start saying, hey, I'm not going to upgrade it to my new Apple phone. I'm going to wait a couple months. And that alone can really bring in Apple's chart. So I'm bearish on Apple. I think the run in NVIDIA has been way overdone here, way, way overdone to the upside. We're seeing, again, this return to this, whether it's Pepe or these other meme coins or stocks like this, it's a return towards speculation, which again occurs usually just before a fall. So I just want to send that out to the world out there, just to be on alert that this market is very borderline a collapse or a bigger drop. I think 20% by year end on the S&P is very likely just by this year. And again, just note, we have the debt ceiling issue within a month or so that we're going to have to deal with. We obviously have the Fed that's going to continue to hike rates tomorrow. The market has to digest that. We'll have to see how that goes. So all of these different things are headwinds for a market, which again is probably already destined to go into recession just because of how high rates have gone.
Yeah, no, that makes sense. Taking it back to the Federal Reserve as the last question before we promote what you do with in-the-money stocks and verified investing in crypto is, what is your personal speculation? Because the Federal Reserve, if I remember correctly, they've got the meeting today and tomorrow with the announcement tomorrow. And then I think they have one next month. And then I think there's a 2 months or 2 months in between the next meeting, if I'm not mistaken.
Yep.
What are you anticipating just over the next two announcements? Do you think that this will be the last rate hike? Do you think 25 basis points would be what they do? Do you think that they'll do another one or pause in June?
So I'm definitely in the camp where I mean, at this point, it's a 25 basis points tomorrow, but I really do think that they should pause. I would be surprised if they didn't, just from what we're seeing occurring in the regional banks with these collapses. I mean, that's telling you that stress is there and these things continue to kind of unfold in a negative way. And if they're going to continue to hike rates, that's only going to put more pressure. Now, if you're right in saying there's some sort of overall agenda to kind of combine all the regionals into just a few of the big banks, then maybe they do continue to hike. Maybe that's their ultimate goal here. But I'm kind of leaning against that narrative, only because I do think that the jobs that are going to be lost from these banks being taken over are going to be significant. So I think, again,
think about that. That adds to the unemployment. I would really want you to think it, and that's what they really want: unemployment numbers to go up.
They do. There's no doubt about it. But at the same time, I mean, it's the supposedly small businesses is the lifeblood of the economy. Now, maybe that's not the case, but I'd be hard pressed to be in the camp that they're really trying to put out every regional bank out of business. But again, that's the way it's going. If they're going to continue to hike, more things are going to break. In my opinion, the regional bank crisis we're seeing is just the start of something bigger here that they're going to cause.
No, I agree. And I've been telling people that, it's like when you have a rock, if you're driving down a highway and you have a rock hit your windshield, at first, you see like just this maybe like just the indentation of the rock, maybe a little tiny crack. But after a couple of days, if you don't get that fixed, you see that crack start to splinter out and go out. And it starts to, every day you don't fix it, it just keeps getting worse to the point that you just touch the window and it breaks.
Yeah, no, I think that's exactly right. I think that's a great analogy about what's going on here. Is the Fed has now, and if you think about it, the Fed broke the economy one way because they printed too much money, and now they're likely going to break it the other way. This is one of the problems with the Fed, is that they always are battling from behind the curve, and then what ends up happening is they have to overdo in one direction to kind of get us back to where they think. They just end up pushing us the other way too far. It's like a pendulum swinging.
Yeah. Well, I mean, again, to me, just reading something like The Creature from Jekyll Island, which I'm going to be interviewing G. Edward my third time this coming Friday, reading something like that, this is obviously by design, looking at the loss of purchasing power from the dollar since the creation of the Federal Reserve, where this is leading us to, this jerking in one direction to another. Eventually it's going to break the system to the point that we have to just go straight into what they're going to be ushering us into, which is that central bank digital currency.
Absolutely. I agree with that. I think that's where their goal is here. They're that central bank currency. They want every transaction mapped and kind of tracked. And that's where we're headed.
Well, my friend, if you would take a moment and share what it is you guys offer at inthemoneystocks.com, and then we could talk about verified investing crypto, and then we'll wrap up today's live stream.
Sure, man. Absolutely. Well, thank you for having me on as always. We always have great
Thank you.
discussions.
Appreciate you.
So inthemoneystocks.com, basically it's a service that I offer there called verified investing alerts. And I put out trade signals, buy and sells on stocks, commodities, and all that other fun stuff. And then ultimately, I do daily videos that have just tons of education, insight, macro views, all the stuff you're hearing today, and even more in depth in those. And then at verifiedinvestingcrypto.com, it's a crypto service, same structure, trade signals that go out when there's a trade setup that's a high probability setup. And you can see the track record there that you're showing, and ultimately daily videos as well. So it's a way for investors to kind of understand the inner workings of the market on a daily basis, gain education so they don't make mistakes that everyone else is making, and also get trade signals when to jump in, when to jump out, in a lot of these things.
And if people want to just take advantage of your actual just general education that you're offering, people could check out your YouTube channel. You got live streams and videos. And then if they want to follow you directly over on Twitter, it's at Gareth Soloway. And there's links for all of these down below, including the playlist with all of Gareth's previous appearances. So, man, again, I really appreciate your time. Before we wrap up, do you have anything that you would like to add?
Just for people to be a little careful over the next week or two. Definitely some warning signs out there in the market. And again, one thing I always say to people: get educated, learn. Spend 5 minutes a day just learning something about charts. It will change your world in 1 year from now.
I love it, man. Well, thank you again for all your time and all that you're doing for us, trying to educate us with the market action. I appreciate you, man. I'm definitely looking forward to our next time. And when I come down your way, I will definitely hit you up and let you know so that we can make sure that we connect.
Perfect, buddy. You have a great one. Take care.
You as well, man. I'm just going to go ahead and finish up the live stream. I'll talk to you later, my friend.
All right.
Bye-bye. All right, ladies and gentlemen, thank you again for tuning in for today's live stream. I greatly appreciate it. I've had lots of information scrolling across the bottom of the screen. I see a couple people talking about here, say no to CBDCs. I would obviously agree. And what I would encourage you to do is to check out my playlist on my YouTube channel, Rice TVX, that is called the Must Watch Crypto Playlist. If I can find it, here it is. The Must Watch Crypto Playlist will educate you about a lot of things, the belief system, the philosophy behind Rice TVX and why we do this cryptocurrency Bitcoin thing, the dangers of CBDCs. Privacy is necessary for an open society. That is the Cypherpunk Manifesto. Lots of education in this playlist. I would definitely encourage you to check it out. Also, in case you missed it, I released a video yesterday with my interview with Joe Bannister, former IRS special agent who actually won when indicted by the IRS. Definitely an awesome video, so I encourage you to check out the content you may have missed on Rice TVX. I got some live videos that I've done recently as well, and an explanation and summary of the fourth turning, talking about the income tax being voluntary. I got lots of information I shared with that, so I encourage you to check out the videos you might have missed. If you are into the Stranger Than Fiction content, I have moved that over to my new channel, Rice Against the Grain. Links are down below for this as well, so make sure you're subscribed to Rice Against the Grain. And make sure you sign up for my mailing list as well at ricetvx.com. Before we wrap things up, I will let you know one awesome thing that you guys could take advantage of to support the channel and have an opportunity to win 10 ounces of silver. You visit moneymetals.com/rice. When you do that, it's going to take you to moneymetals.com, but it will share a cookie and keep that information collected for Rice TVX. You got to use moneymetals.com/rice. You make any purchase between the beginning and end of the month, and today is the 2nd of May. So between the beginning and end of the month, you're automatically entered to win 10 ounces of silver by making any purchase. There are going to be 3 monthly winners. Now, those might change up per month, but as of now, this month, we will be giving away 10 ounces of silver to 3 different winners And to enter, you make any purchase at moneymetals.com/rice. You heard what Gareth said about gold and silver and copper. You can buy all the above at Money Metals. Do appreciate you guys for tuning in. Make sure you subscribe to both channels. If you have not smashed that like button, I would definitely encourage you to make sure you do so. I should be appearing on Around the Blockchain tomorrow, 5 p.m. Eastern time. And this is the thumbnail for the video with Mr. Joe Bannister, the man who beat the IRS. Check out the explanation and summary of the fourth turning. And before we wrap things up, I want to leave you with a little positivity. For one, I do appreciate you taking the time to join me and Gareth Soloway today for this live stream. Time is our most valuable asset. So thank you for being here with us. I encourage you to be a blessing to others. Treat people how you want to be treated. Be the glitch that you want to see in the matrix. Be the change that you want to see in the world. And until next time, practice change, and I'll see you on the other side.